now they said, well, let's make it 60% stocks, 20% bonds, and 20% gold, because they recognize that there's a big inflation risk. And so they're putting out a sell signal on bonds, saying sell half your bonds and put the money into gold. I've never seen Wall Street do that, any major firm, the entire time I've been in this industry. I've been kind of like a lone wolf out there telling people to own gold. Now you've got, major wirehouses saying it. And I think this is just the beginning. I don't think Morgan Stanley is going to be the only firm that's going to be recommending that clients allocate part of their portfolio to gold.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products or services. Always do your due diligence and consult with your financial advisor. And my guest today is Peter Schiff, an economist and global strategist at Euro-Pacific Asset Management, and a very well-known name when it comes to markets, investments and commodities. Mr. Schiff, I'm delighted to have you back. Welcome, sir.
Well, thanks for having me on again. Happy to be here.
Thank you very much. Let's start, of course, with gold and silver. Gold and silver surge, with gold surpassing 3,800, almost 3,900, and silver nearing $50. How do these records signal deeper failures in U.S. fiscal policy beyond just Fed rate cuts? What's your take?
Yeah, well, I think that's what we're seeing. I mean, you're seeing gold now is, $150 away from $4,000 an ounce. I mean, that is a very significant move that we've seen in the price of gold in a short period of time. And silver, yeah, it's back above $47, very close to its double top at 50. But I think that silver is going to go a lot higher than 50. But I think the move in gold is a lot more significant because I think it really indicates a complete loss of confidence in the United States, in its fiscal policy, in its monetary policy, in the independence of the Fed. I think major central banks around the world are moving out of dollars, and they're replacing their dollars and their U.S. Treasuries with gold. I mean, it's clear that that's what's happening. And I think now Wall Street is starting to lose confidence in the U.S. government. I saw just a week ago, it was Morgan Stanley that tweaked their 60-40 portfolio, which was 60% stocks and 40% bonds. And that's, the allocation, for the last 40, 50 years since, I've been doing this, 40 years. And now they said, well, let's make it 60% stocks, 20% bonds, and 20% gold, because they recognize that there's a big inflation risk. And so they're putting out a sell signal on bonds, saying sell half your bonds and put the money into gold. I've never seen Wall Street do that, any major firm, the entire time I've been in this industry. I've been kind of like a lone wolf out there telling people to own gold. Now you've got, major wirehouses saying it. And I think this is just the beginning. I don't think Morgan Stanley is going to be the only firm that's going to be recommending that clients allocate part of their portfolio to gold and then gold-related equities. I think that's why gold stocks are, more than double so far this year. They're outperforming the tech sector. Best performing stocks in the U.S. market are gold and silver stocks. And so this is, I think, the beginning of a big trend, but it should be very problematic for the U.S. because America depends on the world wanting to hold dollars and wanting to invest those dollars in treasuries and mortgage-backed securities. And if the world is going to be exiting dollars and selling those instruments and holding gold instead, that's a huge problem because it means much higher consumer prices for Americans. It means much higher interest rates for Americans, and it means a much lower standard of living for Americans.
Yeah, Pete, central banks are accelerating gold purchases amid dollar divestment. How will this force a global monetary reorganization? And what role might, let's say, tokenized gold play in the transition?
Well, to the extent that central banks hold gold, I don't think they're going to hold tokenized gold. They're going to hold actual gold that they have in their vaults. But I do think that tokenization could be helpful as far as enabling individuals and institutions to more easily transact with each other in gold. If I have a gold token that can move along, a blockchain, then it's very easy for me to transfer ownership of my gold. I don't have to ship you the gold. I can just let the gold sit in a vault somewhere, and I could just send you the token that represents ownership of that gold. And that's much more efficient than, let's say, me sending you Bitcoin. I can do it faster. I can do it cheaper, but I'm sending you ownership of actual gold, not just, a participation in a digital Ponzi scheme. So you have real value that underlies the token that makes it a store of value, something that, Bitcoin or other tokens can't be because they don't have any value that anybody can store. But you can also use the tokenized gold as a medium of exchange, as a unit of account. So I think there's going to be a place for that in the future. It may be one of the few use cases that actually, comes out of crypto. Ironically, just about every other use case is all a bunch of BS.
Yeah, dollar is dumping across the board. The people are not people. The central banks are dumping dollar to buy gold. When do you expect retail investors to finally recognize this as the end of U.S. dollar hegemony?
I don't know. I mean, they're usually the last to get the memo, but I think at some point they will. I think you're seeing institutions now, moving money in. I think eventually they'll, spread the word to their sales forces to, give the recommendations to the retail brokerage client. But I think that's coming probably next year. You'll, if you have an account at, one of these firms, I'm sure next year you might get a call from your stockbroker with a pitch on a gold stock.
Yeah.
Something that probably, you've never heard before. But that's coming. That's coming.
Yeah. Bitcoin gains lag gold approximately 50%. Is this underperformance a preview of its vulnerability in a true inflation crisis? What's your
Yeah, I think Bitcoin, has maybe topped out here. It hasn't been able to go up at all. And in fact, it's in a bear market priced in gold. It's fallen by more than 20% in a month relative to gold, right? Bitcoin's gone down and gold's gone up. And in fact, if you look at where gold was at its peak in 2021, 4 years ago, late 2021, Bitcoin was worth more than it is today in terms of gold by about maybe 18%. So that's a pretty significant decline in the real value of Bitcoin measured against gold, because Bitcoin is marketed as a digital version of gold. So I think if you want to see how Bitcoin is doing, it's best to measure it against gold versus measuring it against the dollar, right? Or any other fiat currency, because it's supposedly not a fiat currency. It's being marketed as a digital alternative to gold. So gold is probably the best way to measure it. And it's down, considerably over 4 years. And that is despite all the massive hype that it's received from the introduction of all of these Bitcoin ETFs, the creation of all these Bitcoin treasury companies led by massive, leveraged buying by Michael Saylor for strategy, the election of Donald Trump and an entire crypto-friendly cabinet with a strategic Bitcoin reserve. I mean, so Bitcoin has gotten the benefit of all of this, marketing, push, and yet it's losing value against gold. which hasn't really gotten any marketing at all. Hey, from, the Trump administration is not out there getting people to buy gold. I mean, he wants people to buy the gold card, but he's not selling actual gold. His sons are in the crypto business. They're not in the gold business. Yet despite that, gold's doing better. And I think we're going to see Bitcoin really take a hit here when I think a lot of the, Johnny-come-lately speculators, not the true diehard believers that'll, go to their grave with their Bitcoin, but people that just bought Bitcoin ETFs because they thought they could make a quick buck and they believe the hype. I mean, these are the same guys that are buying, meme stocks and stuff like that. They're just jumping on whatever's hot, trying to make a buck. I think when they throw in the towel, you're going to see a real collapse in the price of Bitcoin.
Yeah, good point. How do you see the future of silver? How do you see silver performance going forward? And do you see by any chance that maybe some central banks buy silver?
Yeah, I don't know that the central banks are going to get into silver. It's pretty bulky, But I think the retail public will. I mean, they say silver is the poor man's gold. And this whole rally has really been powered by central banks. But when it broadens and you do have more of a retail component, like, I have a gold company, Schiff Gold, and our sales have been pretty lackluster over the last couple of years, despite this record rise in the price of gold. And normally you would see this kind of increase in the price of gold generate a lot of interest among retail investors, but it hasn't happened yet. They've been too distracted with tech stocks or cryptocurrencies, and they haven't, reacted at all. But I think that's coming. I don't know whether it's $4,000 gold, $5,000 gold. Something is going to trigger it. And of course, maybe silver getting above 50, maybe $60, $70 silver, because silver does have a long way to go up. I mean, I could see $100, $200 silver or more in the next 3 to 5 years, and silver's not quite 50. So, there's a lot of upside left for silver. And I think at some point, the retail public is going to start buying silver, and hopefully they'll buy it from Schiff Gold. Right? We got great prices on gold and silver at schiffgold.com.
Yeah, if the dollar loses reserve status due to a central bank gold hoarding, what immediate hardships, such as hyperinflation or job losses, would households face in the collapse scenario?
Well, I think the dollar is in the process of losing that status now. That's what we're witnessing. And it's a consequence of the policies that we've pursued. I mean, particularly the Joe Biden sanctions against Russia. That really highlighted the risk to other countries of holding dollars as their primary reserve because it could be yanked out from under them at the whim of an American president. So that was, a warning cry. But also when you have Donald Trump demanding the Fed cut interest rates, slash interest rates, ignore inflation, print more money, when he starts stacking the Fed with his cronies, when he starts coming up with reasons to fire board members so he can replace them with his own people, it really calls into question the integrity of the dollar system and the independence of the Fed. And the passage of the big, beautiful bill, I think, was a major problem because it really shows that no matter who's in the White House and no matter what they promise on the campaign trail, there is going to be no fiscal responsibility. No spending is going to be cut. The deficits are going to keep rising as far as the eye can see. And so there's a complete loss of confidence now in the fiscal integrity of the United States to ever legitimately get its house in order to the point where it can repay its obligations without creating massive inflation. And therefore, if you know that the only way you're going to get repaid by owning treasuries is with debased currency, then why hold them? And that's why people are selling now. The central banks are selling their dollars and their treasuries and getting into gold. And that's why you're seeing the yields where they are. They're not coming down. I mean, they're not high yet. I think they're going to get very high. But right now, they're in the 4s, but they're not in the 3s or lower, which is where, the government would like them to be, but they're not going to get down there because there's no demand. And I think that the demand is going to weaken over the next several months, and yields are going to rise, even if the Fed cuts rates a couple more times.
Yeah, you have been warning about these red flags, especially the US debt and deficits that are pushing toward economic collapse. How would this manifest, the collapse, in the real terms for Americans? Do you see disruptions in food supply, banking access? How do you see it?
Well, you'll see it in interest rates, long-term interest rates, and consumer prices. That'll be one of the first places, because the dollar is going to go down. And obviously, if you're an investor, you'll see it there first. You'll see the exchange rate of the dollar. You'll see the price of gold. But the average American isn't paying attention to how many euros or how many yen he can buy with his dollar. Unless he's planning a vacation in Europe, he doesn't really pay attention. But the exchange rate of the dollar determines what we pay for our imports. And if the dollar really tanks, then everything is going to cost a lot more. That's on top of the tariffs that we're paying now because of Trump. But we're going to pay more because the dollar is going to buy less. And also, to the extent that we get a big drop in the dollar, that does make whatever we have more competitive for the rest of the world. So more of what we do produce domestically will end up getting sold internationally. And all of that works to push up consumer prices, right? Because if more of what we produce is shipped off to other countries, that means there's less here. And so the price of what's not shipped out will be higher. So all these pressures are going to put, upward pressure on the cost of living, both in terms of consumer prices and interest rates, from everything from home loans, auto loans, credit card. All that stuff's going to get more expensive. So it's going to be a huge problem for Americans.
Yes, let's touch a bit on inflation. Prices rose under Trump despite promises. Why will his term's inflation exceed Biden's? And what do you think about the housing default risk?
Yeah, well, remember, the way we measure inflation is flawed anyway with the CPI. But the worst year under Biden was his first year. That was the year where it was 9.1. And the reason it was so bad was because that was mainly left over from Trump. That was the consequence of all the money we printed during COVID when Trump was president, right? And after that, inflation kind of, backed off for the next few years. It was still well above 2%, but it was below where it was in 2021. But now I think it's bottomed out and it's headed back up, not just because of the inflationary policies that we got under Biden, but because of the even more inflationary policies that we're getting right now under Trump. So I think that whereas Biden started office when inflation had hit a short-term peak that first year and then gradually backed off, I think that the lowest year for inflation during Trump's term is going to be his first year. And so it's just going to be on the upswing. So it's going to make it a lot more problematic because things are going to get worse as we get deeper into his presidency.
Yeah, Peter, how are you viewing the stock market as we speak? There is a lot of liquidity out there. Do you believe that we will see more gains in 2026, or we could really see a correction after 15, 16 years of this bull market, except the COVID correction?
Well, it's hard for me to say what's going to happen. The stock market is way overvalued, so it should come down. But what it should do and what it will do are very different things. And a lot of it depends on just how aggressive the Fed is with its rate cuts and with a return to quantitative easing. I was even watching a clip, Eric Trump was talking, and he said, the Fed's about to start QE. They're going to go back to QE, so you got to buy Bitcoin, right? But he forget about his advice to buy Bitcoin, but, he said the Fed's about to start QE. Now, does he know something, right? Maybe his dad told him, hey, we're going to ramp up QE when we take over the Fed. But look, if they print enough money, then stock prices aren't going to go down. But in terms of gold, They will continue to go down. Look, we've been in a major bear market. In the year 2000, the Dow was worth about 40 ounces of gold. That was an all-time record high. Today, it's worth 12 ounces of gold. That's like a 70% drop in 25 years. But if you want to put it into even a longer perspective, 96 years ago, in 1929, the Dow was at 19 ounces of gold. Today, it's 12. So, yeah, it's 36,000 or 46,000, whatever the hell it is. But that doesn't mean anything, right? When gold's at 3,800. Gold was at $20 an ounce in 1929. So everything costs a lot more now than it did then. But in order to see what's really happening, you need to look at things in terms of gold to take the inflation out of it. And when you remove the effects of inflation, stocks are lower today by about a third than they were almost 100 years ago. Now, of course, they're not exactly the same stocks because they've made some changes to the Dow over that time. But just the index. I mean, the government wants us to think, oh, look how rich we are because the Dow's, almost 50,000, right? But it doesn't mean anything, when gold is almost 4,000 and it used to be $20.
Yeah, that's a very good point. Final question, Peter. What commodities or hard assets are your favorite, beside, of course, precious metals?
Well, I mean, I think we're headed for a general commodity bull market. So I like all the commodities. I like the precious metals, silver, platinum. I like energy and also, uranium. But that's a little bit more speculative and it's going to have bigger, ebbs and flows because there's a lot of hot money in that sector. But I'm still bullish on the energy complex. I like the industrial metals too, copper, nickel, zinc. I think we're going to see a lot of these metals. And, of course, agricultural commodities, are going to go up. Yeah. This is an inflationary environment that we're in, and that benefits, real assets, which would include commodities.
Yes. Peter, how can people reach out to you?
Well, they can get a hold of me. My asset management company is Euro Pacific Asset Management, Europac.com. I've got a team of advisors that can help. We manage money for people. You can transfer an account over. We have separately managed accounts. We have programs that are tailored to a declining dollar and to try to deliver superior returns in a stagflation environment here in the U.S. And we're killing it so far this year. Even our basic dividend payer strategy, global strategy is up 45%, and our gold strategy is more than doubled, on the year. So the returns are very good. I think they'll continue if these trends stay in motion, which I believe they will. So people should reach out to our advisors. Also, if you're a do-it-yourselfer, I have 5 mutual funds that can be bought no load. You can get information on all those mutual funds, including the ticker symbols and the prospectuses, on my website at Europac.com.
We will leave the link in the description, definitely. Yeah.
To get physical gold and silver, which I recommend everybody have some, Schiff Gold is my company. Just go online, fill up your shopping cart, or talk to one of our representatives, and they'll help you, get the right gold and silver. Won't, try to push you into high markup, collectibles and crap like that so many other dealers are selling. I don't believe in any of that stuff. You just want to maximize the amount of gold and silver you own and buy it as cheap as you can. That's the deal. It's a commodity. A 1 ounce gold maple leaf is a 1 ounce gold maple leaf. They're not going to be any better no matter where you buy them. So the key is just to get a good price. Buy them from somebody that you trust and get a good price, right? And that's what you'll get at Schiff Gold. And in the meantime, follow me on social media. I've got about 1.2 million followers on X.
Wow.
So I'm constantly, writing stuff there. Subscribe to my YouTube channel. My main one has about 600,000 subscribers. I have a smaller one I just started to do for Schiff Gold. It's got about maybe 30,000, but subscribe to those and follow me. But I'm also on Facebook, Instagram, TikTok. I mean, wherever you find me on social media, follow me and then encourage your friends to do the same thing, because I'm really trying to disseminate this information. There's so much false information. that's out there that I need to counterbalance. So the more people that are paying attention to what I have to say, the better.
That was Mr. Peter Schiff. Peter, thank you very much for these great insights as always, and I look forward to host you again sometime soon.
All right. Thanks a lot. Take care.